Everybody, this is Mr. Lu. Today is a serious discussion of a new investment strategy that we've discovered, okay? It's in the infancy of it, but this is where I want to share some of the initial findings with you that could be potentially life-changing for myself and many of you. So if you're interested, please continue to watch this video. So as usual, okay, this is the title of my slides today is called a new stock market strategy. We have a breakthrough thinking in diversification. Breakthrough thinking in diversification. And for those people who want some serious stock market analysis, you must watch this one. This is the usual disclaimer. Please read it yourself. I'll give you a few seconds. And now let's go into the serious discussion. Before we start, always remember that all our research, all our videos take a lot of effort to do. And if you really appreciate this, please remember, give a like. This will help a lot in the YouTube algorithm to promote this video. And remember, hit subscribe if you haven't joined us yet. And remember to join us in our Telegram channel, where we have got 31,000 people over there. A lot of 1865 community experts there to help you answer questions. And the Telegram channel is called Lu1865. Okay, so we have been talking a lot about S&P 500, NASDAQ for, the last few months or so. And S&P 500, NASDAQ now break record after record after record after record. And a lot of people are celebrating and a lot of people are skeptical. A lot of people are jealous. There's a lot of emotions in the market and things like that. And now there's a huge group of people are saying that, the stock market of US, is potentially going to crash. There's a lot of risk in the country. There's a lot of debt problem. The US dollar going to be de-dollarized. The US government debt is so bad. The US government is going to shut down. The potentially the new president will come out and derail the market, blah, 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 blah. A lot of all these risks involved, right? And they basically are skeptical whether the last 100 years of incredible rise of the S&P 500, the last 50 years of the rise of the NASDAQ will continue. Well, today we're not going to talk about whether they will continue, but actually, is US stock market the only good stock market that we can deploy this strategy of buying during crashes and let it just compound and go up and go up and go up? Let's take a look at the few research findings that we have. First of all, this is the S&P 500. The S&P 500 over the last 20 years, for illustration, has gone up by roughly about 4 times, which is an amazing number, 4 times. It has broke through new highs. We have crossed the 4,900 points, and it's a wonderful thing for many of us. But is this the only stock market that is capable of doing that? Is this the only stock market index that's capable of doing compounding over a long period of time? Okay. And that's why we did a lot of research and found the following. The first findings is that actually, in terms of stock market in these indexes, there are a lot of very bad ones. A lot. Okay. The whole world is filled with them. Okay. Whole world is filled with them. We just pull out some familiar names and show you. So this is Portugal. Portugal suffered the Europe debt crisis. And since the Europe debt crisis until now, okay, they have never recovered. Okay, so they were at a high of about 15,000 points or so and have crashed all the way up to this very day. They still have not recovered. Okay, they still have not recovered. So it's a terrible market that's crashed by but by 50%. There's some strengthening of euro, but net they're still bad. Okay, they're still bad. The Japanese market, in a first look over the last 20 years, wow, has gone up, by about 2 times net of exchange rate and things like that. But if you step back and zoom out, they hit a high, okay, at around 1989 or so. They hit a high, okay, of about nearly 40,000 points, and then they crashed all the way down for almost 30 years, for about 30 years. Before recently coming back again. So I wouldn't consider this a good market. Okay, I wouldn't consider. So if you just look at the last recent 10 years or so, they have actually recovered. 10, 20 years have recovered, but I wouldn't consider this a good index. Okay. The STI, if you look at last 20 years, actually not bad, right? Last 20 years, not bad. They went up by roughly about 2 times. But if you look at since the global financial crisis until now, it has never recovered. It's just flattish throughout. This is an example of a really bad stock index. Okay, really bad stock index. Okay. So as we find out more and more, there's actually a lot, many of such examples of really bad ones and things like. But as we were researching, we actually found surprisingly there are many good ones as well. We're going to show you some in the interest of time. We're going to show you some interestingly good ones. Okay. So the first one that we're going to show you is India. So the India stock, the stock market has actually, went up by about 10 times since year 2000 or so. 10 times, 10 times. But the India rupee, has depreciated against the US dollar about 2 times. So the net has gone about 5 times. It's a very successful story, And I think the India story will continue, right? It's still a developing country with lots of growth potential. Unlike China, India has less of those political turmoil and things like that, and a lot more friendlier to the rest of the world, especially the United States. So they unlikely go into langaration, right? So langaration, comes from a langa. Okay, so I think the Indian market will have continue to have a better runway moving forward as well. So this is a great market that has a very long runway of growth. So US stock market isn't the only one that has a good runway, right? This has gone up by 5 times and seems to continue growing. So you look at the Korean stock market, it's actually not bad as well. They survived the Asia financial crisis, where she collapsed quite a lot. But since the year 2000 or so, they have been continuing on this rise. So net of exchange rate fluctuation, they went up by 4 times as well. That's about the same as the S&P 500. If you realize it, okay, not far away from the Indian stock market as well. So this is a good stock market, and looking at all the K-pops, the Samsungs of the world, and all the wonderful Korean skincare and beauty and all sort of things, which I'm a great fan as well. I think Korean innovation and Korean strength of economy will continue. Okay, will continue, and we'll see this as a possible continuous rise as well. The German stock market, is a very interesting gem in the whole continent of very sad story. Recently, they go into a bit of a recession, but the stock market actually has been a very strong, growth over the last 20 odd years. It's gone up by roughly net of exchange rates, but gone up about 2.5 times. It's not bad. It's not as good as S&P 500, but it's not bad. And if you understand the German economy and the German people, they're very hardworking. The processes are incredible. They are very a powerful engine of stability and growth for the whole Europe. So really, I think this is a good stock market collectively as a whole to explore, right? Far towards South Africa, we have the Brazilian, the Brazilian stock market, which is a very interesting stock market as well. The Brazilian stock market over the last 20 years has been going up and up and up and up and up and up. Of course, a lot of volatility in between. There's went up by 6 times, but the Brazilian currency, I think it's called the real or something like that, has depreciated about 2.5 times against the US dollar. But net, they've grown about 2.5 to 3 times, right, over this period. And you can see the stock market continue to go up and up, because it's still on a developing, growing state. Not too bad, right? Now, so in a nutshell, you see that while the whole world is full of very bad indexes, but there are some gems that have sustained a strong period of growth, net of exchange rate adjustment and things like that. So this is a very interesting discovery for all of us, right? Very interesting for all of us. So we should not think of the US as the only market that that is exhibiting this miracle, and one day you will just collapse, because this kind of successful compounding growth is not unique to US, is replicated in a few successful countries as well. So the key takeaway point of today's video is this: we should not be that afraid of the US stock market, because the US stock market is not unique to have this kind of compounding growth. It's a core feature of good economy. Okay, great success story of its own, right? So the story of India, the story of Korea, the story of Germany, the story of Brazil has actually shown us that growth of 2.5 times to 4 times or 5 times is not unusual. Now, one very important thing is, if you have followed my previous video, we were all trying to diversify out of US, and we couldn't find markets to diversify in terms of funds and things like that. But with this new discovery, actually, it's possible to now do worldwide diversification, and this market are no longer overlap with these market indexes are no longer overlap with the S&P 500. So I think worldwide diversification is now possible, and I think I will be looking into exploring some of this. This is my initial findings. We will do much more research, and we'll keep you posted on our discovery. And we welcome any comments, any insights that you might have, and let us finesse and fine tune this with your feedback, okay? And share with us these comments either in the YouTube and, more importantly, in our Telegram channel, and we will improve on it and develop a very robust diversification strategy beyond the S&P 500 and the NASDAQ and the CPF, okay? So if you like this video and this interesting discovery, stay tuned for more along this topic, and we'll keep you posted, okay? With this, thank you, and I'll see you in a day or two. Bye-bye.